And the recent crackdown on insider trading, well, could it deter people from engaging in the banned practice? Karina Huber explains why some might still be willing to take massive risks.
In 2011, hedge fund honcho Raj Rajaratnam was sentenced to 11 years in jail and fined more than $150 million in combined civil and criminal penalties for insider trading. Rajat Gupta, a former director at Goldman Sachs and managing director at McKinsey & Company, is currently serving a 2-year term for participating in the scheme. These are just 2 recent examples of insider trading convictions brought upon by the office of this man, U.S. Attorney Preet Bharara. Columbia University law professor John Coffey says the crackdown will deter white-collar crime.
The likelihood of apprehension is the greatest deterrent to crime. And that's even truer in the case of white-collar crime, because most white-collar crime is committed by people who have assets, who are not penniless, who are subject to loss of reputation, loss of financial assets, and have other alternatives.
But clinical psychologist Alden Cass says it's impossible to eradicate all insider trading. For some, the potential for rewards for bad behavior are simply too great to resist. He says those willing to take the risk tend to be narcissists.
They tend to believe that everything they touch will turn to gold, that they have the Midas touch. They operate under their own rules and don't believe that others' rules apply to them.
According to Cass's research, the typical profile of a white-collar criminal is a well-educated Caucasian from a middle to upper-class background with no prior history of crime. They tend to be around 30 years old. Another common trait, little or no remorse for their crime.
They believe that they're, in some ways just stealing from the rich so it doesn't hurt anyone. People were gaining while I was gaining, so no one else was really hurt. I didn't murder anyone. So they've found ways to rationalize it in their own head so they could sleep at night.
Some have suggested decriminalizing insider trading, as it's virtually impossible to eradicate. But that's not likely to happen, as it would erode confidence in the capital markets. Coffey and others believe the best remedy is to continue with the crackdown and make the penalties so steep that more people realize the risk isn't worth the reward. Karina Huber, CCTV, New York.